Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. With me today is Ekta Batra and I'm Vivek Iyer. Ekta, good afternoon. After the kind of sell-off we saw yesterday, clearly markets are cheering. It's a green screen across, as we try to end the week on a very positive note. The Midcap index is up over 1% and the small cap index is catching up almost 0.9% higher even as we speak. So, remember today is an important day given the fact that there will be some flows that you will see, especially towards the later half of the session with the FTSE and the MSCI. But remember, HDB Financial's rupees 12,500 crore IPO has finally made its way to the D Street, with the offer opening on June 24th and closing on June 27th. Our colleague Ritu spoke to G Romesh, Managing Director and Chief Executive Officer, HDB Financial Services. Let's listen in.
The company is about 17 years old. We've had a profitable track record for most of our journey. The first year that we were in business, which is the financial year 2008-09, we made a marginal loss, but we've been a profitable company ever since. We have a large franchise. We have presence in over 1,170 cities. We are a well-scaled company. For us, the IPO is really a milestone in our journey. Our whole focus as an organization has been on building value, right, both for our customers and for our stakeholders. The price is really a reflection of what our investors that we've been engaged with for the last few months and what our BRLMs have advised us.
Okay, but, it would be fair to assume, given the regulatory uncertainty surrounding, what RBI's draft rules say about overlapping businesses between banks and their subsidiaries, is that the reason you had to take a bit of a cut over what you were expecting?
So, look, the draft form of business circular, the draft came out in October, sometime in early October 2024. It's about 8 months now. I can't really speculate on what the final circular will say, so can't really address that question.
But that is the biggest question in the investor's mind. How are you going forward with this IPO with that big uncertainty still looming large? What is your understanding as far as how this could proceed if the draft were to be implemented in its current form?
So we started off as a subsidiary of HDFC Bank. We have built over the years, and one of the interesting things is that though we have 19 million customers today, they've been originated by the company. We don't get any leads from anywhere. We don't get leads from our parent or any other companies. These are customers originated by the company itself. So we have an independent origination engine, an independent risk management engine. Our technology platform is independent. We have more than 1,700 branches across the country. These are independent branches, they're not part of a HDFC Bank branch. These are independent branches. And so we have an engine that's independent of our promoter. We have a lot of guidance from them, in terms of corporate governance, or whether it's risk management, or whether it is, how do we manage a business through cycles. But at operating level, we are an independent business, no deputation of staff from the bank to our company. So it's built and run as an independent company. So the company's characteristic is not going to change in any manner in the years to come.
Well, it is an independent company, and now that you're going to be public, you're going to be responsible to the shareholders. But the fact of the matter is, the HDFC Bank, if it has to bring down its shareholding, last year the bank was in talks with strategic investors. We do not know if those will fructify, if you're still in talks with them. But, what is the various sort of outcomes that you've planned for, the kind of surety that you can give to investors at this point in time?
So we are an independent business, set up and run independently. We have a board that is competent and a management that's competent. So we've run that business. What the promoter will do in case a circular comes about is at this point of time speculative.
But the fact of the matter is your rating is very much linked to your parent. That impacts your cost of funds directly. If that were to change, how would life change for HDB?
So we have a portfolio of businesses. And for us, our philosophy has been how do we deliver value to the customers through their life cycle. We have a bunch of products that are built around aspirational India. So when we think of our customer, which is aspirational India, we're saying, what is it that this customer needs through their life cycle? And how do we fulfill that requirement? So customers have requirements around their business, and customers have requirements on their personal requirements, consumption, or buying products for the home. So irrespective of what the customer needs, our philosophy is how do we build a suitable product or service that fulfills that requirement. And we'll continue doing that in the years to come.
You know, just a final question before we move on from this issue. Have you engaged in discussions with the regulator? You know, are you able to convince them that the businesses are separate? Because when you look at LAP, consumer finance, vehicle finances, these are overlapping businesses between the parent and you. How is the customer segment different? What sort of, dialogue have you had with RBI about this?
So we work with Aspirational India. This is a customer segment that's fairly heterogeneous in the way they speak languages, the businesses they run, or what their aspirations in their life are. We have presence in over 1,100 cities. We have built the capability to deliver credit at scale to a very heterogeneous market, right? Finally, there are finite ways of delivering credit, and that's what we are focusing on. What is it that our customers need, and how can we deliver that requirement effectively? We don't do any arbitrage. We don't do any businesses that banks are prohibited from doing. I think we are quite comfortable with the fact that we are doing a business to a customer segment and delivering a product and service effectively in a very responsible and competent manner.
So that's the case you've made to RBI?
I can't tell you about, it's confidential conversation that we have.
All right, fair enough. You're also raising about 2,500 crores through the fresh issue apart from the OFS component. You're very well capitalized at this point of time. Your total capital adequacy at 19.2%, Tier 1 capital at about 14.7 almost. What sort of boost will this give to business with the additional capital that you get, and how long do you think this will suffice for the NBFC?
So, since we are doing an IPO, we felt that it's also important to look at the next few years and make sure that we don't come into the capital markets a few months or years after doing an IPO. So we felt that this is the right time to raise capital. We expect it to last to about 3-4 years. Having said that, if the Indian economy has a huge flip up, I'm sure the investors will be kind to give us more money.
All right. Let's get into the financials then. We understand, of course, you can't make any forward-looking statements here, but FY25, your last reported numbers, it's not really been a very good year. Profits have come down. Credit cost has shot up sharply for the bank. ROA has fallen. Growth has been uneven. Would you be able to at least give investors the confidence that things will start to turn around from here on?
So, again, had a huge track record as a company of being a profitable growth company, right? So we will have events, macroeconomic events or microeconomic events that require us to adjust our portfolio and adjust our growth rates. That's something we are comfortable with as a company. We believe that we have to manage growth with profitability, right? We can't forsake one for the other, and that's what we've been doing. So some of these numbers will go up and down a little bit, but in terms of a growth path, we see a very clear opportunity ahead in terms of both the markets and our ability to service those markets.
But the large pain point has been stress, especially in the unsecured book. We've heard commentary from the Reserve Bank of India governor saying stress is starting to abate. Is that something you're seeing in your portfolio as well?
So the unsecured business is something we've been doing since about 15-16 years. It's a business we understand well. Again, our business is not about creating a program and then spreading it across the country. Whenever we open a branch, we try and understand what is it that drives the local market in terms of the opportunity. How do we adjust our credit policy and our product delivery to the local requirement? So we are, so what we have the ability is to understand depth at scale. So there's a layer of technology on top which analyzes what's happening in the micro market. So not only are we getting signals from our own field in terms of our own origination and our own collections teams, but also what our analytics is telling us about each market.
Okay.
So we fine-tune our portfolio, fine-tune our credit processes to make sure that we are covering our risks well, leading into opportunities, and that's how we refine our business all the time.
Okay, so that is HDB, and we will get you more details on the upcoming IPO. As of now, we need to take a short break. We'll get you more on the markets. A lot of stocks in focus on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. On to our segment, Midcap Movers. We have with us Hormuz to take us through all the midcaps that are moving around at this time.
Well, all those who were seeing the broader market screen yesterday are feeling a sigh of relief after seeing the rebound that we have seen in today's trading session. And take a look at the gains as well. BEML 9% higher on that stock, and Vari and Premier too doing very well for themselves. Of course, Vari is a FTSE adjustment candidate as well today, so inflows likely to happen towards the closing of today's trading session. The easing of the project financing norms has been a boost for a lot of these financiers, be it IREDA, PFC, REC. They have done well for themselves. CLSA has also reiterated their high conviction outperform on both PFC and REC, expecting at least a 35% upside in both of these names. HUDCO too chipping in with a 3% advance. Some of the other names that have done well in today's session are the capital market names, which have seen a rebound today, be it Nippon Life, be it CAMS, be it MCX, all of them seeing gains of 3 to 4%. Stocks that have done well on the back of volumes, and those also have seen gains of anywhere between 3 to 5%. Endurance Tech at one point was up 9%, and it has seen very, very heavy volumes in today's trading session. Keynes Tech, of course, on the QIP, and Hyundai Motors back above its IPO price of 1960. And lastly, some stocks that are bucking the trend in today's trading session. Some bit of red as well, like Concord Biotech is at the lowest point of the day. Pratap Snacks is at the lows of the day. Northern Arc at one point was down 9% after that block deal, but it has recovered well. And Orient Cement has been an underperformer all through this week, another 4% down in today's trading session. Back to you guys.
Thank you so much, Hormaz, for joining us, giving us a sense of what exactly is moving as far as the broader end of the markets are concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Well, welcome back to Midcap Radar. Well, it's an important day, especially for passive funds, given the fact that there will be adjustments made to the various indices. The two indices that we are looking at, the first one is the FTSE and the second one is the MSCI. Remember, FTSE today is a net inflow event as far as Indian equities are concerned, given the fact that there are almost 5 new additions to the FTSE All World Index, and there are 3 additions to the All Cap Index. So which are the stocks that are impacted and which are the stocks, in fact, that are reacting? And remember, these flows typically happen towards the later half of the trading session. The last 1.5 hours is when typically you will see volumes rise for the stocks that we will be mentioning. So look at names like Hyundai Motors, that's an entrant, NTPC Green, Vishal Megamart, Vari Energies and Swiggy. All of these stocks enter the FTSE All World Index. Hyundai Motors, in fact, is seeing significant inflows of over $130 million. The stocks that are entering the All Cap Index are OneSource Specialty, Sai Life Sciences. Remember, there was a large block today, and Afcons Infra. These stocks enter the FTSE All Cap Index. The other stock that is in focus on the back of a deletion that it will see from the MSCI is actually Siemens Energy. So, Siemens Energy, remember, it listed yesterday. It's the demerged entity from erstwhile Siemens, and it will be deleted from the MSCI Global Standard Index. Expect outflows of close to $150 million. So volumes will definitely spike in the last hour of the trading session as far as Siemens Energy is concerned.
Okay, all right. So that's an important set of stocks to watch out for. But Delhivery is under pressure on the back of a bearish note by Jefferies. Mangalam is here to tell us more.
Well, Jefferies has issued a bearish note on Delhivery, where they've gone ahead and cut the target price, downgraded the stock to underperform as well. What they're basically believing is that, the risks that emanate from some of their key clients starting to insource their logistics at a time when e-commerce logistics players itself are likely to see lesser growth than what they've seen over the last 5 years, which was buoyed by post-COVID boom, is not particularly doing well for third-party logistics players, and particularly Delhivery, which was earlier a market share, a market leader in the third-party logistics providers in when it came to e-commerce marketplaces. And the client that they're talking about right now is, Meesho. Remember, Delhivery as a stock has outperformed the frontline index ever since it announced its, acquisition of Ecom Express. So there were positives that were expected from the consolidation of the industry, but at the same time, on the way down, this insourcing from some of the key clients is bearing down on the stock, as a result of which they believe that their market share by FY28 could actually halve to about 34%, at a time when the e-commerce parcel volumes are likely to compound at 10% for the next 5 years, as against 30% as they did in the previous 5 years. They've cut their target price from 500 rupees to 315, and as a result of which the stock, mildly under pressure, though has recovered from lows. So it'll be very interesting to track where it goes from here.
Thank you so much, Mangalam, for joining us and giving us a sense of what exactly Jefferies had to say as far as Delhivery is concerned. Delhivery, remember, opened quite lower quite sharply, but since then has recovered and now trading near the flat line. But it's a very good time to get your snippet from our latest episode of our digital offering, Market Cafe. This week, Surabhi Upadhyay sat down with Pankaj Tibrewal, founder and CIO, Ikagai Asset Manager, to unpack his investment thesis, including how he discovered Solar Industries and why, for him, the promoter behind the company matters the most.
One of the companies which is now known in the market is a company called Solar Industries, right? A very
it has gone
less known,
up and only up.
so a less known promoters in, say, for example, Nagpur. 2006 they came for IPO. If my memory serves me right,
2006?
2006.
Wow,
If my memory serves me correct, Surabhi, they raised about 80 plus crores. And after that, they just did a small dilution in 2013-14 of 100 crores. And every 3 years, their top line used to convert into bottom line, right? And very strong promoters. But over a period, they kept on reinvesting the cash flows back in the business for growth.
Okay.
And whenever you used to meet them, you used to get a sense of passion, integrity, and skin in the game. They still hold the promoter family 75% or 74.5%. And today, the market cap is 1,50,000 crore.
And now
when we identify, it was 1,000 crore market cap.
1,000 crores to
50,000 crores. And last 10 years, they have been investing in defense, for example, without a single revenue coming in. So over a period of time, what you understand is that one, the promoter quality has to be extremely good. Because businesses kabhi linear line mein nahi chalte hain. There will be periods when couple of years business doesn't do anything. And we have seen that in many companies. There is a slowdown, there is some external environment problem, challenges, internal challenges. And there when you have a conviction on the business and the promoters, then you ride that slowdown along with them.
So tell me, and Solar, just for context, I mean, now we all know Solar is so big in explosives, in defense warheads. In fact, in Operation Sindoor, I think many of those warheads were used on the various missile systems that were at play. And the stock has gone on to achieve wonders as well. So on that point of staying the course, even through the rough patches, when a company is not showing growth, when it's going through a painful period where operating cash flows are not rising, or you know, maybe there's a delay, or some of the usual fundamental parameters are not getting met, or margins are getting squeezed, how do you decide to stay on versus checking out, saying that red flag nahi, or
so one thing which you don't compromise is any governance issue and any red flags on balance sheet and cash flow. I think वो जहाँ मैं देखता हूँ मैं भाग जाता हूँ, whichever the narrative or the business story will be. I think if those are intact, even in a slowdown, I think what you have to check is that is the promoter more in pain than you? See, you are 25% shareholder in the company. Promoter is 50, 60, 70% shareholder. He's pained more by the slowdown than you are. And I have seen that leaders of the sectors, they work harder during that slowdown and emerge stronger after the cycle from a bottom. So I think you have to get that sense during the interaction, during the conference call of the quarters, that what are they doing to come out of that slowdown and the disruption which they are facing today. And if you get the right answers, you stay on the course, irrespective of what is happening in the market. And I think there are many companies which have seen such cycles and they came out much stronger after the cycle.
So what made you take that bet on Solar? Just to, you know,
I think
recap
I'm just giving you an example, but I believe that the fact that, you know, year after years, they kept on reinventing themselves. They started with a supplier to Coal India. They moved to private sector. They moved internationally because they were cost efficient. Became world number 2, 3, 4 over a period of time. Then they thought that their strength is chemistry, explosive. Why not enter into defense? Privatization was happening for defense. The 8-9 years they kept on only pumping money, no outcome. But see, when the outcome comes, जब देता है भगवान तो छप्पड़ फाड़ के देता है. So I'm just saying that this is not a recommendation. I'm just showing that if you can get
thought process, we just wanted to understand
that thought process and patience and staying on the course for a longer period of time gets rewarded. I mean, look at a promoter like Mr. Tapadia of Supreme Industries, 88 years old. the kind of passion he comes along with still today. And he's a leader in the PVC pipe sector today. And look at the way the company has grown over the last 20-25 years. Look at my own ex-employer, Mr. Uday Kotak. 2003-04 we got the banking license, the only private sector generation, and everything common is the leader. So get the leader right, get the balance sheet cash flows right, get and be patient with your temperament and your own thing. You will make money.
Okay, and you can watch more of that show on the timings above. But as of now, we need to wrap up on Midcap Radar. Your stocks once we're back.